The magnificent Cathie Wood is deep into another stock, so of course that means we should be looking at possibly investing in it too. So in this video, we're going to break down what she's invested in, why, and of course how we can play it ourselves. And you know I do these videos because I know how much you guys love Cathie. For example, David here, who says Cathie Wood reminds him of E.T. on a lot of estrogen. Really? Well, okay, there's Cathie and there's our buddy E.T. Is there any resemblance? Huh? Oh, okay. Now I see it. Beautiful. E.T. or whatever, we all love Cathie Wood because she makes us money. So what's her latest stock that she has nearly $1 billion invested in? It is none other than Roku. So let's break down Roku's bull case and how to actually play it. First thing you gotta understand before we talk about anything is that Roku is not a hardware play. That's where a lot of people go wrong. It is not about these little dongles. No. It's all about the platform. That's why I showed this as Roku. This is the important part. This is the moneymaker. And you will see why in a second. Now, Cathie Wood being invested in Roku is no big surprise. It's a huge hedge fund hotel. Everybody's invested in it, including Greenhaven Road Capital, who described their thesis pretty well. And this is a pretty famous hedge fund here. So what they're saying once again, which I was just saying, is that Roku monetizes the home screen of smart televisions, not about hardware. Now, Roku is built into 1 in 3 of the televisions sold in the United States, so it's pretty much everywhere. And this is happening in Canada, England, Mexico, and Brazil as well. But once again, we want to focus on the software. So the operating system is purposely built for television. So it's less resource demanding than alternatives like Android. So this allows for cheaper manufacturing and a cost advantage in the very margin constrained television market. The net result is that Roku adds users for less than $20 and does not tie up any capital in the manufacturing process. So you guys know this. If you bought a TV lately, it's probably a smart TV. Actually, it's definitely a smart TV. And most of the time it's Roku powering that smart TV. So because so many of these TVs are powered by Roku, they are everywhere. So many people have them, which is why Roku has been able to build a nice little moat. Because once you start using Roku, you don't really switch. And if it comes on your TV, then of course, why are you going to buy anything else? You're going to use what's already your home screen. So the Roku platform sits between the 43 million active users and content, making money when used. And actually, it's way more than 43 million now. You can see here their latest numbers show that they have 51.2 million active subscribers. Compare that to Comcast, AT&T, Dish, Verizon. There is no comparison. And the reason you're comparing it to cable companies is because when you cut your cord, you do end up buying a smart TV and it's probably a Roku. But look how many more users they have. And that growth in users has been absolutely insane. You can see over the last 4 years, it's been nearly a 40% a year growth rate. So tons of people are using Roku and there's more and more flooding in. So Roku on their platform itself, they have their own channel, the Roku channel, which is supported by ads, meaning it's free to access, but then you gotta watch ads. And then they earn revenue on any subscriptions to other streaming services. So for example, if you subscribe to Netflix through Roku, Roku gets a cut of that, something like 20%. And we'll talk about that more in a second. But Roku has consistently increased revenue per user. Last quarter was up to $24. And the reason why is because of increased engagement and advertising rates. Last year, Roku purchased a company that helps clients enhance marketing and advertising efforts with data science so that it's easier for their largest advertiser to place ads on Roku. And what we're talking about here is this home screen, because if this is the thing that you see every time you turn on your TV, well then you could sell some ads here and they'd be pretty lucrative, right? And we'll dive into that a little deeper in a second here too. So in Greenhaven's opinion, the growth of the user base is highly likely because there's going to be a continuous upgrade to larger, better, and less expensive televisions. The cost of televisions has dropped like crazy over the last few years. So that's why people don't mind upgrading anymore. And when they upgrade, they're obviously getting a smart TV, which once again, Roku is most of them. Well, not most, but a third. Roku benefits from that cord cutting. And you can see right here, on average, Roku users who cut the cord save approximately $75 per month on home entertainment. And this is from Roku itself, as were the previous charts. In fact, Roku device owners report more savings than owners of other streaming devices. Interesting. Don't know how that works, but let's take them for their word. So Greenhaven says that there's currently a very large gap between the Roku operating system and the Samsung and Sony systems. It reminds them of the period when Nokia and Microsoft were hanging on to their mobile operating systems. You don't see those anymore, do you? The Microsoft one was so cool too, with the little tiles. Stupid, but cool. With a growing user base, Roku has increasing negotiating power with content providers. Since the quarter ended, Comcast decided to put their Peacock streaming offering on Roku after resisting initially. Just another sign of the increasing power of Roku. We have the opportunity for substantially growing the user base and revenue per user while consuming very little capital. Now from all this, you could see Roku is a middleman, but it is so good to be the middleman in this situation. It is glorious. Because if you are the middleman between customers and all the content like Netflix, HBO, and all of that, then what does that mean? That means that you basically own the customers. That's why we were talking about this platform right here. That is what is key. And the streamers like HBO Max and all them, they hate it. it. So Greenhaven right here was talking about Comcast fighting with Roku. They didn't want to put Peacock on there. But eventually they caved. Same thing with HBO Max. It was so annoying not having that app on Roku. Then finally, when HBO Max was releasing Wonder Woman this Christmas, they're like, yeah, we got to get on there. So they made the deal. But the problem is every single streamer has to be on Roku because Roku has 52 million people? And that's just growing like crazy as we saw. Look at this. Sorry, it was 51.2 million, but growing at 40%. So if you're not on Roku, then you're screwed because you're not going to be able to compete with the other streamers. So HBO Max ran into the same thing. They fought as hard as they could, but at the end of the day, you're going to do what Roku wants. And a big part of Roku's revenue comes from being that middleman, because if they have all these people logging onto their site, and it's not even logging onto a site, it's just turning on your TV. If they buy anything through there, like a Netflix subscription, HBO Max, anything like that, Roku is getting a percentage of that. And that also goes into these one-off movie releases that, say, Disney did with like Mulan. You have to pay $20 or something to watch it. I think that might all be over now, but even those Roku would get a cut of. So it's a great place to be, right in between the customer and the streaming services. But also another huge benefit that you have by being directly in the face of the customer, that they see this every time they turn on the TV, is what we talked about before, all the advertising that can happen. Now here's an example of what your homepage might look like, and look right here. Showtime, Shameless, huge ad. This is prime real estate. How many people are seeing this when they turn on their Roku? And sorry, not their Roku, but their TV, because they're one and the same thing now. This is prime real estate. So here's the thing. Roku, by being the middleman, they basically own the distribution. And I talked about this before when we were talking about Netflix a few days ago, but owning the distribution is so key. And I'll take you back to that Netflix example. Why do you think a show like Tiger King became so popular? Yes, the story of Tiger King is crazy, but if it was on any other network than Netflix, it wouldn't have been as big. And that's because this Netflix home screen right here is amazing advertisement. And it's all advertising their own shows. It's the home screen. A lot of people go straight to Netflix, right? So Netflix has its own marketing machine that's absolutely free because it's its own algorithm that can make something like Tiger King blow up. So Netflix owns the distribution. But what is blocking someone from Netflix? They got to turn on their TV, right? So one layer right before someone even hits Netflix is Roku, which is why if you see this Showtime ad before you see even Netflix on your Roku home screen, you might end up going here. So think about that opportunity. Owning the home screen before the person can get to Netflix. In a way, Roku owns the distribution even more than Netflix. And if you want an example of owning the distribution, you see these little buttons right here that come on every smart remote now? What I didn't know, because I'm stupid, is that companies actually pay and they bid to be one of those buttons. Because I always wondered, why can't I just program them myself? And I think you can in some remotes, but who actually does that? Most of the time, you're just going to use what's on there. So a few of my Rokus have Disney, of course Netflix, Hulu, and some other random one. But Roku itself was a huge contributor to Disney Plus's success and all their millions of subscribers. A lot of them came through Roku. And like I said before, streamers hate this. They hate the fact that Roku is sitting in between them and the customer. So there are going to be fights all the time, just like with Peacock and HBO Max and Roku. Even when I had my Amazon Prime account, where I was getting a Showtime subscription, HBO, all of that through there, those guys all had fights too, because no one wants you going through another company to get to them. They don't want to give that other company the cut. But if your TV is literally Roku, then what are you going to do, right? You're most likely going to go through them. And that's why it's such a powerful position. And this is also why they're building such a nice moat. They have all these subscribers now used to Roku and its platform. They're not going to go switch. And you can take a look at what I'm saying right here with the revenue breakdown of Roku. Previously, like back in 2015, yes, they were more of a hardware company. You can see the gray part is the player, which is the hardware. Purple part is the platform. But over time, the platform has taken up most of the revenue. You can see it's 70% now. When I say taken up, that's not the right word. I mean, it has grown into most of the revenue, because this was their plan the whole time, to be the platform, not just sell dongles. I don't know why I love that word dongle so much, but I do. Now, one downside here that I will say is that I recently switched to Google TV. They got a new Roku looking thing that you plug in. And I gotta say, it is way better than Roku, because the way it works is that you have one home screen where all your recommendations come to. So everything that you were watching from Netflix, HBO Max, all these different streaming services all compiled here. So if I was watching a show and I had to exit out, so I don't have to go back into that specific app, I could access it right from the Google homepage. You can see it right here. Your show Lovecraft Country is right here, one click. The Good Place, Rogue One. See, The Good Place was on Netflix, Rogue One is on Disney. This is on HBO Max. It's all in one place, instead of having to go into each individual app, and I loved it. By the way, Lovecraft Country, amazing show, worth watching. And The Good Place has one of the most incredible endings I've ever seen. But back to the point, I would say that Google TV's homepage and design and algorithm, way better. And their advertising is better too, because this is way more attractive to me me, like this ad, if I've never seen Lovecraft Country, compared to this Shameless one right here. And it's a better experience, it works faster, it's all around better. Now, do I think that makes Roku a worse off play? No, because I don't think Google is focused enough to make that Google TV a big thing. Roku, they have a singular focus. That's all their company is there for. And they have a much bigger advantage. They're already in all these TVs. The Google TV I had to go buy. And I actually have the Google TV dongle plugged into a Roku TV. It's stupid, but I did like Google that much more. Do I see other people doing that? No. And besides, a lot of times this whole homepage doesn't work because once again, all the streaming services are fighting. So Netflix came and said to Google, no, you can't pull our shows to put it on your homepage. And then if they shut out Google out of the API, then that's that, right? So it's not perfect, but I like it. But okay, you see the bullish argument here, right? It's not hard, but how do you actually play it? Well, if we jump in the chart here, oh my God, this is a beautiful stock, isn't it? But it is so far extended right now that when I look at this chart, it really looks like the best time to have gotten in is back here, back at the end of June, right when this 50-day moving average, which is this yellow line, is crossing through this 200-day moving average, which is this blue line. And I would say this bar right here, what an entry point, July 1st. Because if you entered here, then you have a huge support level right here and a good place to cut your risk if it breaks below. And you can see from this entry point how great that trade would have been. Now, of course, hindsight is 2020, but this is a good example of why this kind of works. Now, if the stock is sitting all the way up here, what I would probably do is wait for it to come and touch this line once again, this 50-day moving average. Then once again, you're getting a nice little support and you're most likely going to get a rebound. You can see how many times it has rebounded off this support in the past. But who knows, it could just keep going up from here. See, it hasn't touched in a while. Last time was in November, which isn't too long ago. But honestly, seeing this chart and trying to figure out where to enter, this is why I love my momentum system. Because we have our algorithm that just measures the momentum of a stock. And if it hits our criteria, we're just entering. We don't have to find the perfect entry because it's longer term. And then we have standard risk control measures in place. So it does make it easier to be more long term and more flexible because you don't have to wait to snipe an entry in here. You could just ride the trend. But you got to have a good way to identify that trend. And the best way I like to do that is with another algorithm that measures the prices in the market. Now, of course, at the end of the day, that's just my strategy. And what you should do, no matter what you're into in the market, is follow your own strategy. So if that means straight up buying Roku right here, then so be it. Just make sure that your strategy does have some type of risk control because there's no one perfect way to play the market. You just got to do what works for you. So for a strategy, you want to know when you're buying, how much you're buying, when you're going to sell, both on the upside and the downside. And when you combine those things together, you're going to be a lot more successful long term. The problem is when people don't think about their exit strategy and just buy whenever. And then when things turn around or things act a little different than they thought, they don't know what to do and they end up losing money. So don't be that person. Make sure you have that plan. And once you have that plan, you can apply it when we're looking at stocks that hedge fund managers are getting into. Speaking of, Cathie Wood has another stock that she invested even more money in that she thinks is even better than this one. And we talk about that stock in this video right here. Definitely check it out because I also think it seems more lucrative than Roku, which is probably why she invested more money in it. Once again, that video is right here. So click here and I will see you there.